Ladies and gentlemen, it's a great pleasure having a conversation now with Jeff Booth, a great friend of mine that I follow for quite a while now, and that I had the pleasure meeting in Vienna at a conference very recently. Jeff, thanks for taking the time.
Thanks for having me, Ronnie.
Jeff, you're currently in the car. You told me before that you're taking the Powder Highway, which being Austrian is of course something that I'm highly interested in.
Well, so far it's been fantastic skiing, fantastic, and lots of snow.
So even more so, thank you very much for taking the time.
No problem.
Mark is here as well. Hi, Mark.
Hi from Liechtenstein. How's it going?
Very good. So, well, Jeff, I mean, we met at the conference in Vienna, and you delivered a terrific keynote speech called "How Exponentiality Will Change Our Understanding of Economics." The conference was held. It was an Austrian economics conference that was held actually at the Austrian Central Bank. And I also did a speech there called Monetary Tipping Point. And over coffee, we said it feels a little bit like, being the vegetarian in the big butchery, talking about crypto, talking about gold, sound money. In the heart of the, I wouldn't say of the enemy, but from a central bank. So it was a really fascinating keynote that you delivered, and I'd like to talk to you about that keynote. But before, I would like to briefly introduce you for the people that haven't heard of you. This is the book that you wrote, The Price of Tomorrow, a fantastic book that I can only highly recommend. Jeff, I think we've got many mutual friends. Larry Lepard told me recently that you met each other and that it was a really fantastic meeting you. Nikolaus Jilch, a great friend of us and also contributor to the Ingolby Trust Report, did a tremendous interview with you. So I think there's quite a lot of common things. But actually, you're not, I would say, like a financial markets guy. You're coming from the business world. So you basically where you led Build Direct, a technology company that simplifies supply chains in the building industry. So, Jeff, I would like to ask you first. What was your journey? How did you, coming from the tech world, how did you find out about the topic of your book? So why deflation is key to an abundant future. Um, what led you to Austrian economics, to understanding the monetary system that we're in, and then ultimately, how did you find out, and when did you find out about Bitcoin?
Yeah, it's lots to unpack there. So I think I'm a technology entrepreneur, and actually I would say primarily I'm just an entrepreneur. What does an entrepreneur do? They look out into the future and they say, this industry or this vertical or whatever doesn't make sense. Why are people operating this way? And they look out and how to solve problems. And if those people, if those entrepreneurs are right, and we use their product or technology, then they create a great business. And it's that great business is a result of our actions using their invention. And so what we were using before, we don't see the new until it's already there, and then we can't imagine our lives without it. Take an iPhone for an example. We don't see we can't understand the iPhone coming until it's in our hands, and then we can't imagine our lives without it. So it's a good example of what an entrepreneur does in predicting the future. And if they're right, they make a lot of money, but they make a lot of money as a result of helping other people. So that's what I've done all my life. And then when I saw the rate of change of technology and how fast technology was moving, I decided to, and this was in '99, I decided to try to change an industry with technology, and that was the building industry. it wasn't the only industry I was interested in, but it spent 20 years of my career building a pretty sizable company there as a result of how fast technology was moving. The first technology we built to solve that in kind of 2000, 2001 cost $5 million and teams of programmers to be able to do. That technology to solve that supply chain is now essentially free in the world. And so as I was building the business, I also got really interested in, especially when 2008 came and we had letters of credit with corresponding banks all over the world. And for 3 days, nobody would take our money. So our containers sat in ports. And what happened is the entire financial market was seizing up. And a company that was really growing fast, like our company, even though we had all sorts of cash, it didn't matter. It turned into a liquidity crisis, and as the world stopped. And so in building that company and understanding that a lot of impacts in building the company were not just what we were doing, but outside of our control in the macro framework, I got really interested in what was going on. So today I'm on boards of, I think, 9 or 10 different companies. I'm owner of a bunch of different technology companies, and all, I would say, are typically, or all are doing that same thing, providing more value by using technology to essentially make the world a better place. I wouldn't join that company unless I believed that that was the case. And for the last 10 years, it's been bugging me. And I'm going to add one thing. A lot of times when an entrepreneur is successful, they rewrite history on what it looked like. And they take out the part of all the messiness, and they think they were right the entire time. Or if they were wrong, or if they missed it just slightly, they're penalized greatly. Failure you lose everything or you win everything, and you forget in your own mind how close that line was. These lines are really, and so now on top of that, you have this macro influence and framework that is affecting all of those decisions. And I was really curious because I saw some friends make billions of dollars and some friends just as capable lose everything from imagine 2008, from a coin flip that should have gone the other way. So nothing that they were doing in that case, a coin flip that should have gone the other way. If you actually ran free markets. So I got interested in that. And something that also interested me was, and by the way, I didn't even know about Austrian economics before I wrote my book. I didn't put myself into that camp and say, I just wanted to understand market structures myself and what was happening. And what I realized, and what I couldn't figure out was, if what cost me $5 million here is now free, and everywhere I looked, every entrepreneur was lowering the cost and bringing way more abundance, staggeringly so. And that technology was moving exponentially. It was so great a power in our lives that we didn't see it. It was, and most entrepreneurs couldn't see it either, because they had to predict how fast technology was moving to be able to meet the market demand at the time that the technology was there. Here's an example. If you use Palm Pilot before iPhone, it just didn't work. It wasn't. But when the technology moved to a spot that everything worked, the company that was there at the right time exploded. Network effects reinforce on itself, and it's hard to unwind that company. Anyways, I was really interested in that phenomenon, and I saw it in my own business, and I saw it in all my friends' businesses as well. And you'd have to think, if those prices were falling at that rate, and they were being driven by entrepreneurs providing us more value, it seems pretty logical that prices should be falling at that rate too. And I could not understand why not. Why prices were. So that's when I went on a search for it. I was talking about it for 10 years. I talk about it at dinner parties. I just couldn't understand it. So I started investigating why. What I realized is you had these two giant forces in our lives. One driven by the free market and entrepreneurs wanting to drive more value to us, and we were using that. We vote with our time to use these products. This Zoom we couldn't have done 10 years ago, and this Zoom is going to touch potentially millions of people that would have never seen this information 10 years ago, and it's free. And the other force was a counteracting force that had to operate exactly opposite in manipulating money to be able to juice economies, to be able to try to stop that force. And that those two forces, that essentially money supply force or lowering of interest rates first, and then trying and what I found is over the last 20 years, if you looked at the macro, there was $185 trillion of credit creation to produce $46 trillion of real growth. And you have to ask yourself, if it takes essentially $4 to $1 for every real dollar of growth, how long is that sustainable for? Worse, if technology is moving one way at an exponential rate and it's still moving that fast, then not looking backwards, if it took $185 trillion to get to this point, and this is when I wrote my book, it's obviously gotten a lot worse because that would be predicted in my book. What must it do going forwards to offset that technology gain? And then if you extrapolate from there, what would that do to society? What would that do to our belief system? What would people think in that system? And what would we do? Because we don't see that technology. We don't see the impact. We live in a system and we measure from a system, and we think it's something else. So what would happen to human nature as that system was just built on manipulation? Grew and grew and grew and grew, and what would happen? So that's the things I explore in my book. Why did I do it? Why did I do it? Because probably I'm an entrepreneur. Solving these things means a bunch. I care about it, but more importantly, I looked at my kids. I looked at my young kids, and I said, "What is the type of world that they'll grow up in if this continues?" And unfortunately, you can see since I wrote my book, everything is just playing out like it's a perfect prediction of what we're entering into.
Yeah, I think it's very interesting what you say, especially for us coming from the monetary side, rather talking to somebody coming from the tech and from the innovative side. I think that's super interesting. We are, I dare to say, very much on the same page when it comes to the monetary system. I think you are one of the very few people who points out, which to me, and correct me if I'm wrong, I think also to you, may be the deep root for the problem on the monetary side. And I think if you dig down very deeply, I think it's basically the debt-based characteristic of the monetary system, right? Could you explore a little bit perhaps this characteristics and why this probably is the factor which brings this monetary path to such an exponential line, which is not very sustainable, if you ask me.
Sure, and you're right. It's not sustainable. So if you just play this path forward, it has to break. Mathematically, it's impossible to keep going, unless, I'm going to put a caveat there, unless you concentrate all wealth or all power in very few hands, and everybody else is working slaves. That it is possible to have some sort of world where the very few haves control everything with AI and automation, and everybody else is just a slave in that system, if it's allowed to centralize further. That's where we are. Another path, so if we just kept going on this path, that's where it would look like, or it would look like war and reset. And through history, we see when a currency fails, or when fiat currencies fail, what typically happens is you have a war and a reset, and the winner makes the rules on the reset. similar to Bretton Woods after World War II. So if you look out at these options, or you have an option, what I believe is an option of Bitcoin is a transitionary mechanism that builds a bridge to the other side. And we'll explore all of these outcomes, or all of these potential scenarios in depth. But back to your question. The question is it a function of a debt-based economy? And the answer is yes, it is a function of a debt-based economy. And why is it a function of a debt-based economy? That is a little deeper. It's into our human action. It's because we want it to be. And once a debt-based economy is, we will always vote for short-term pleasure rather than pain for the long term. And so digging a little deeper, and that's why gold has failed, and not failed, but failed from a people being able to control it point of view, to hold governments in check on printing money, and throughout history. And so what would happen is gold worked really well for the last 5,000 years to be able to do this. And if you actually look way further back, if you look 5,000 years back, or 3,000 years back, 1,000 years back, currencies didn't fail as fast. And what's happening today is, and remember, a lot of people look at US currency, US dollar being 101 years old, and still having strength today, without realizing it actually failed in 1971. And then they created another game by tying the petrodollar complex to it, to extend its life. It would have failed faster. But if you look at what happened throughout history as gold as an anchor, to your question, and we've always had technology, but technology is moving faster and faster and faster. So based on that, you would suspect that what would have taken 500 years for currency failure as a debt economy was built on top, now probably takes 50 years. And that's probably true. So you've had this in faster and faster technology over human course, and a model for trying to keep it in check, anchored typically to gold, that gets out of hand. Why does it get out of hand? Because gold has to be centralized, and for monetary velocity, you can't use gold. So you build a credit-based model on top of the gold for monetary velocity, and then that credit base, and then essentially banks change the reserves to gold lower and lower and lower, to be able to drive that more of that credit expansion, and then remove gold from the entire mix. And then at some point, what governments do is they go and attack all the gold, they grab all the gold, and they revalue the gold, and they start again. And that's typically after a war. Is that fair?
That's fair. But perhaps could you just also explore a little bit the fundamental mechanism, what happens when money is created in the system, and why basically this brings us to this exponential path? I think it has to do with the interest, which is basically not created by the debt, right?
Yeah, and what ends up happening is you can't pay back the debt. At some point, a government can't pay back its debt. If you look at inflation, it's a hidden tax. It's the most regressive tax there is, because nobody votes for inflation. But it is a way that governments can expand their services. And so you have politicians up here telling you that it's taxes when most of the revenue comes from inflation. And you have a whole bunch of people around the world biting on thinking it's taxes. Now, if most of your revenue comes from inflation, which is just a regressive tax, and it says my money must be worth less value each year. Now think about that. We live in a society where there's a general belief, a wide-held belief, that we must have theft in our money to be able to live in a productive society. And it's simply not true in any sort of logic, but because we believe it's true, we allow it to be true. And then instead of questioning why should we have theft in our money, we question what rate of theft is okay. So we say 2% theft is great, but 3 or 8% or 15% theft is bad. So now what would happen? If technology is trying to lower prices and entrepreneurs are trying to lower prices and we all vote with our time to use those products, if you have theft that has to increase the prices, has to, or the debt collapses because you can't pay it back with taxes. So you get to a debt bubble that can't be paid back. That theft has to expand. You have to manipulate money to print more money or disperse more money to be able to create that theft. Now the question is, who wins by that theft? Who loses by that theft? So inflation is wage deflation. It's savings deflation. So they're two sides of the same coin. So as you steal money, then people on working for wages, or middle class and lower income that don't have as much assets, lose, and they're working harder and harder as houses are going up in price, everything's going up in price, and that is as you keep on moving away from that, you're actually transferring more, because you're transferring more and more of your economy into the government because you have to, because those people at the bottom, and there's way more people at the bottom than the top, so way more people impoverished than are enriched, and the people at the bottom turn to that same government and say, redistribute the money. And what ends up happening is you have societal collapse and democracy fails. And people come in and they blame the rich for creating this, and it's somewhat true, but it's not true from an entrepreneurial perspective. It's true that entrepreneurs are just trying to provide more value. It's just when the game is rigged for the chosen few, and everybody else is left out, and the hamster wheel's moving faster and faster and faster, they want to kick over the board. And Monopoly board is a really good example. Imagine going around a Monopoly board in a game of Monopoly, and if you land on certain squares, you get early. If you don't land on kind of free parking, go to jail early, then you have a positive incentive that reinforces on itself. You collect houses, they move around the board, and your positive externality is somebody else's negative externality. They're moving around the board, and it's harder and harder for them to win. So it consolidates, and as you go around the board. In a Monopoly board, what ends up happening typically is either the game resets and you play again, or the loser kicks over the board because it's so frustrating, and they get mad. So in the real game of Monopoly, imagine if that same thing happened, and as you go around the board, and the losers are going around the board, and $200 doesn't get them around the board anymore. And then instead of the people on top in a free market failing through a liquidity crunch, and the losers actually being able to win in that, the bank changes the rules and pushes up all the prices of all the assets. And so instead of just having houses, they have hotels on all of the game board, and the person's still going around, the other people are still going around the board getting $200, but they can't get around the board anymore. So what will they do? They'll go to government and say, I need $300 or $400. That $400, which is essentially coming from their pocket too, because it has to be printed to push the assets up higher. Now they can't get around the board again. And so if you look at that, you could say MMT, you could look at all of a bunch of social programs, you could look at all of these functions to be able to try to keep people playing a rigged game.
Right.
Is a function of what we're talking about, and it's because you don't have a free market. You have inflation, a system that's based on theft that has to expand and create more and more theft all the time. And if that's the way the world works, then it doesn't work very well for a majority of the people.
I think we couldn't agree more, and I love the fact that you're talking about the ethics of money production. I don't know if you read the book already by Guido Hülsmann called The Ethics of Money Production. It's a fantastic book. And I think this is something that is in the gold scene, but especially in the Bitcoin scene, something that is not discussed enough. I think we discuss quite a lot, the price action of Bitcoin and of gold and whatever. We discuss inflation numbers, economic growth numbers, and whatever. But I think most people, I would say that the majority of people completely miss understanding the root cause of all the problems, or most of the problems that we are in. And these problems, I think we all agree to, they stem from our monetary system. So Jeff, I mean, we already talked about quite a lot of very existential things. What I really loved about your presentation in Vienna is when you said, when you have misinformation in money, you have misinformation everywhere. I think that was a fantastic quote. Now, you also talked about CBDCs, and you briefly touched the topic of rising inflation. And I think since you published your book, The Price of Tomorrow, I think it was in 2020. Um, since then, quite a lot of things happened on the inflation side. So, as we know, I think December 2020 CPI, which is not the best gauge for inflation,
I'm
obviously,
kidding.
uh, was at 1.2%. December 2021, it was at 7%. How would you say from things that you experience in the business world, but also from your discussions that you have, um, do you think that people really woke up and they realized, well, inflation now is a topic again? So basically, the inflationary forces being driven mostly by central banks and especially governments, now really overwhelming the deflationary forces that you so brilliantly describe in your book?
Yeah, and so I think again, for all your listeners, when you're caught in something that is moving, if there's misinformation in money, there's misinformation everywhere. And there's a lot of misinformation in money today. Just look at how much is being printed. So there must be misinformation everywhere. All money is an abstract concept for our time. And so if you're manipulating it, then you must have, so who wins, who loses, what does that look like? But to your point, it's going to be, these concepts are so hard because we measure a system from the system that we're in. So a goldfish doesn't know what the world looks like. It measures its bowl. You don't know what a world would look like in a different operating system. You're measuring the operating system you're in. Is a really important concept. And if you're bound to make that mistake, because everybody makes that mistake. So potentially me too. So you have to keep on asking from a first principles basis, what would happen? So ask yourself this: what would the economy look like with no further printing? If Powell actually does what he says, if he won't, but if he actually does, look at the markets today, look at the markets in the last number of weeks, look at the bond market sell off, look at everything that's happening there. If that actually happened, you would cause a deflationary spiral. And remember, the debt cannot be paid back, and there's nothing backing the debt in all the banks. In our entire economy, everything, financial institutions, hospitals, grocery stores, everything, your way of life is built on top of that essentially Ponzi scheme of debt. And so let's just say we stop printing. What would happen is not the deflation I'm talking about, the good deflation act run by a free market and entrepreneurs keep delivering you value, and every year you get more value and prices keep falling down, what you would have is you'd have a cascading debt collapse. But the debt is the backbone of our entire economy. There is no hard money backing it. So everything would fail. The asset prices, like you wouldn't even, it's hard to comprehend the world you would live in without that printing. And so now you ask, why is inflation there? Well, inflation is there because we're manipulating money at such a great extent. And if you actually measured the last CPI print, the 7% in the US in December, if you measured that CPI print in the same way that you measured CPI in 81, that inflation print would have been about 15%. And people can see it. Their housing is going up 30%, their rents are going up 25%, their food prices are going up 25%, their gas prices, their heating and everything is going up at that rate. And they're told to believe it's not there. That's actually what I'm talking about, the monopoly board. And they're getting mad. They can't pinpoint the reasons what we're talking about, but they're getting mad. And what they're getting mad at, they think it's those billionaires, those entrepreneurs, because it's easier to label a face or a picture of a person than a structure of a market. And so again, when you have misinformation and money as a byproduct, you have misinformation everywhere. And this is a structure of the market that has to get worse. And that getting worse typically ends in revolution, war around the world. And you can see, if you look at the signposts around the world, you can see that amping up too. And so that, just ask yourself, without printing, what would it look like? And then say, what will governments do? And they might tell themselves, we have to, because society will collapse without it. And actually they would probably be right. So you can expect, and I think today you have to expect, I've said many times, which snowflake causes the avalanche. We'll typically look at this snowflake and instead of the overall structure of something, and we'll blame the snowflake. This is math. It has to fail, and it can fail in a number of different ways. But in what we're heading for, so you could get a tightening of a policy that'll cause a cascading credit unwind, and in that case, the U.S. dollar would actually get stronger. Some of the best assets might sell off really quickly because people need cash. They need something to be able to, and depending on how far that went, if it went too far, governments would have to come in and nationalize banks. If it didn't go far enough, a whole bunch of people would be wiped out. Remember, I was talking about the entrepreneurial decision on top of other decisions. A whole bunch of people would be wiped out into that tightening, and then it would have to loosen like crazy, and you'd have to pump tons of money in, again, distorting capitalism worse, to be able to keep printing. But this is unfortunately where we are in the cycle, and there is no other way out.
Yeah, I think we agree totally. And I think we saw two very big precedents in the last 13, 14 years. So the first one was the GFC, and the second one was probably the Corona recession. The market did, and I was really, I mean, a lot of people, but I was stunned how many trillions they really started printing in the form of quantitative easing in March. And I was even more stunned when at first the market didn't react at all. Even the head went all in. But prior to that, I always thought that after the GFC, basically the ice is broken. So I think there's basically no chance that they would let this debt deflation go. And I think Corona recession basically confirmed this view. And I think also it's probably your view too. That's the way less likely outcome that they will print too slowly. Am I right in this assumption?
Yeah, I think you are. And in that, and again, remember, go back to 2008 and I think about what happened on my company, right? No counterparty bank would take our money. We had the money, but our bank might not have had the money because they had risk somewhere else in housing or somewhere. And so it's the things you don't think about. And as that fails, and trust, like, what is the piece of money that you use? It's just a trust mechanism. So as trust leaves a system, it leaves it entirely. And so go back to 2008 and you say, did they make the right decision? For a free market capitalism, absolutely not. Right? Absolutely not. Because free market capitalism requires cleansing. It requires creative destruction. And if you don't allow that cleansing, the winners that were winning in the old system because of the rules, they have to lose. Goldman should have lost instead of becoming a bank. All of the winners on top should have lost. Now, that cascading collapse in society would have been horrific. We can only imagine what that would look like. So now the whole bunch of people sitting around the table, largely sitting around the table, who are the architects of the crisis, sitting around the table, deciding what should we do. You might even be able to forgive them because that cascading collapse would have looked so bad for society. But what do you do as a result? Remember, the architects of the crisis are sitting around the table deciding what to do to save the crisis. What you do is you actually encode grift into a system. And all the architects of the crisis know now that's a one-way bet. I can't lose. If I lose, then society will eat the cost as I socialize the losses. If I win huge. So now you have inside capitalism, it's not capitalism anymore, it's crony capitalism. Inside, but people think it's still capitalism, which is worse. Because now they attack capitalism, they attack a free market, because they think what they're dealing in is a free market, and it looks nothing like a free market. You've actually put into a free market a massive theft into a free market, and all the people that created it know it.
Yeah, and also raising the stakes for potentially letting it go the next time, it makes it even more impossible, because you could have blown this bubble much more bigger.
Two sides. Now remember, one side, exponential technology going this way, other side, exponential debt going this way. So it's 10 times worse than it was in 2008.
Yep.
And by the way, in 5 years, if they can reflate it again, it'll be another 10 times worse.
Right.
We live in a mirage of manipulation of money. And when you live in a mirage of manipulation, just ask yourself, is this a free market? I mean, is there any free market if you can manipulate money like this? And if there's that manipulation in money and it's not a free market, a whole bunch of things that we used to believe, I believed when I grew up, on working hard and saving money and being, it's all out the window, because it's just based on who decides to get to print money, and nothing else matters. It's just a mirage, and it keeps on, it gets worse and worse and worse, and that worse and worse and worse must, as a byproduct, concentrate all power into very few hands. It must.
Absolutely agree. And on the other hand, I think that when when the shit hits the fan, we shouldn't underestimate the creativity of bureaucrats, central bankers, and politicians. So obviously the big question is, how long can this last? And now we are being told that inflation is only transitory. There's new concepts like average inflation targeting being introduced. CBDCs are a big topic. We said that at some point we're pretty certain that a yield curve control will be introduced, that the Federal Reserve at some point will start buying equities, as well as they do in Switzerland and also in Japan, for example. So probably it can last longer than we all expect, because I think Thorsten Polleit, an Austrian economist, calls it collective corruption, because there's just so many people and entities interested in just keeping on, at least for a while. So I know that's a tough question, Jeff, but if you could put on a timeline or a date? What do you think? How long can it still continue?
It can happen for a long time. It can happen as we believe it can happen. It can happen for a long time. Let's run through some game scenarios of this. So today, right now, we're living in a. You'll look back on this years from now. You'll see the same thing. But today, right now, in tightening policy, what will happen if you continue to tighten policy? As the U.S. dollar gets stronger, and all the debt is denominated worldwide in the same U.S. dollars, then everywhere else can't pay back their debt, and you'll have failures of countries. It'll cascade around the world, and as that debt gets wiped out, and a whole bunch of counterparties will lose. If that happened, just imagine that scenario. If Fed said we're staying the course and we're going to increase interest rates and we're not buying anymore, it's going to be a free market. If that happened, if that happened, because it can't happen mathematically, it can't happen. But if that happened, the resulting worldwide chaos from that happening would have you, me, the world racing, maybe not me, but racing in to the politicians, same people that got us here, saying, or a different person, different face, saying, print, turn it on. And if any politician, if the Fed said we're not going to do it no matter what, you'll be able to see how tight government and Fed is, right? Because an independent institution essentially gets co-opted by government, because a central bank gets co-opted by government because society demands it, because they can't eat, they can't feed them, so they will concentrate more power in government to solve the thing government created, unfortunately. So how long can it last? It can last a long time. The next cycle of this, and this is where it turns into, you remove democracy, you remove the free market, because people are so hurt, they will vote for a dictator who tells them it's that person's fault, and it's not your fault. Here's what I'm going to do to help you, but I need to change the rules of how society works to be able to do it, and they will vote for that. And we've seen that throughout history. We see it throughout history. If you look at Germany, what happened when an inflation rate got out of hand, and who won, who lost, and how an entire society. By the way, we're the same people. It's not like our minds have changed in the last 75 years. We have kind of the the good wolf, the bad wolf. Which one do you feed? Our human nature is subject to the world we live in, and we don't see it. It happens really fast. And so why most people don't stand up to that force is it's such a powerful force. Ask a lot of people listening to this right now will be thinking, I'm not going to buy Bitcoin because the government could shut it down. And what they're actually doing is giving the government more power. Instead, they'll stand up on the street and march against the government, or some people will break windows. And what they'll do, and as a byproduct, they'll give the government more power, because government has to create more inflation. A lot of people will say, you have to stop that. And I need more police force to be able to stop that, to penalize those people standing up. And I'm going to need more police force, and I'm going to print more money to do it. And a bunch of people tying into that system, it'll get worse and worse and worse. So that's where we are in the cycle right now, unfortunately. And what Bitcoin is, specifically Bitcoin, what Bitcoin is I believe it doesn't have counterparty risk. It's a choice away from that system. And as it gets stronger and stronger and stronger, it becomes a bridge to the other side, that as more people are buying it, and more people not just buying it, holding it, innovating to it, they're building a wider and wider bridge that society can walk across. Because actually, what is actually happening? You talk about price action in Bitcoin. What people are talking about price going up, and what they're unfortunately doing is they're still measuring their world in a fiat world. if you actually see what's happening in Bitcoin, what's happening is all prices are coming down against Bitcoin. And that will happen, I suspect, forever. And so it's telling you what the free market would look like. Now it's bumpy and it's early and it's but it's telling you what that would look like over time, and all prices will come down, I believe, forever in Bitcoin terms.
I think that's a great analogy with the bridge. The question is the bridge to what? I think it's a different monetary system, and then built on that, a different economic system, obviously. But just going back to this other side of the river where we unfortunately still are. So this is, would you agree? This is basically a great centralization what's happening, and hopefully the solution, the antidote then would be a great decentralization, right? And that Bitcoin bridge could lead us into a more decentralized world. Is this kind of also part of this analogy?
Yeah, and we pretend we don't like centralization. And that, I wrote a little bit about this in the book. Centralization is a giant force in our life, and it's a natural force in our life because it makes it easier. So Google is essentially decentralized because you could go to page 400,000 and find any information. The problem is, for your time, you don't. You simplify and you only go to page 1. And you actually simplify more, you only go to the first couple of results. And that centralizes that power into Google, and it centralizes. And if that's determining or Facebook or anything else, and if that's determining your thoughts of what you believe, and you don't look deeper, then it centralizes more and more and more, and it just reinforces. So if you actually think about the internet, first wave of the internet, open communication, that allowed anybody access to create any amount of information. A lot of that information is bad, but some of that information is incredible. Now, how do you find that information? And so the early stages of the internet, a whole bunch of new entrepreneurs that nobody trusted. Okay, this internet thing, it doesn't make any sense. In 1998, people, remember, Google didn't exist at that point. It would take 10 minutes to download a cat video at that point. Like nobody used it at the level that they do today. They didn't see this, and it moved and moved, and that was that decentralization. But on top of that, on layer 2 or layer 3, Google, Amazon, Facebook, it centralizes really quickly, and it centralizes because our time needs it to centralize. So now, it's easier to use your US currency in a system today, and it centralizes for the same reason. And you keep going back to it, and you keep going back to it. What Bitcoin is you're right, it's that decentralization. And actually why Bitcoin, this is probably tied into gold, tied to everything else, and why I know you guys like gold. And there is a very real possibility that in one of the, if you just played probabilities, in one of the events, potential futures, that gold is used again. I just don't, personally, I don't think that is the best thing for humanity to get to the other side, because it just resets it around the same thing and we start again. And to get there, I suspect where we are in the cycle now, it would take war to get there. And so I don't think, for me, I don't think it looks like what I would want to happen, nor so I'm putting my time into voting. Essentially, when I spend time on Bitcoin, putting my energy into what I want to happen and what I think has a higher probability of happening. But that path, just ask yourself this. Throughout history, if something could be manipulated for control of some humans over other humans, would it be? And the answer is yes, right? That's actually what our monetary system looks like today. That was the people getting around the table in 2008. That was what happens with gold. That was what happens with when the US goes off of gold and then puts together kind of a petrodollar complex where they tie currency to energy. And if you're outside of that, oil complex, if you don't sell in US dollars, you're either cut off from the world economic engine, or you're invaded. But all of these concepts are because us as humans will, if we can manipulate a system for control over other humans, we will. And it's not pretended, not bad people. And what we will and we'll tell ourselves is, but when we do it, and our friends and our family, we'll create better rules for other people. And we won't see the negative externalities of that. Or we'll do it for our nation, and we won't see the negative externalities of that. And again, keep coming back to it. Is there a time in history where that isn't true? And so if a system can be co-opted by humans for control over other humans, it will be. Not it might be, it will be. Bitcoin is the only thing that I've seen that can't be. China just tried to shut it off. It grows faster. It turns a global competition into global cooperation, because you could hate Bitcoin, you could yell it at it all day long, but that free market foundation that it does and keeps it decentralized. Money needs to be decentralized at this level. That free market foundation that it does, even if you're yelling at it, by it working, it's constantly lowering prices for you. So you don't even need to use it, and prices are coming down because it's and eventually those prices will come down to free or nearly free on it, as your time gets reallocated into something more valuable than it is working for it as a slave for a system that must is based on corruption. And so there's a lot of people today that don't know that, and they look at other altcoins. They're looking through the lens of, I need to make enough money really quickly to try to be able to retire and live my life the way I want to live it in a system that's based on corruption. And it's spreading around the world. People don't even know they're in this system. And I think, and I'm always willing to question those things. Where am I wrong? What's the look? I'm looking for alternatives if something I said is wrong. So but I have not yet seen anything that matches Bitcoin in what I'm saying, that actually has a chance to actually right this ship potentially forever.
Jeff, regarding the question gold versus Bitcoin, I mean, for us, we always had the view that it's not mutually exclusive. So both are having an extremely high stock to flow ratio. Both don't have any counterparty risk. Obviously, the track record of gold is significantly longer than the track record of Bitcoin, and this is probably the reason why the volatility is so much higher in Bitcoin. But you know, we are on this journey for quite a while now, Mark and I remember when we approached the financial market authorities, I think in 2017, discussing a potential Bitcoin fund, and they kind of ridiculed us. So I think that over the last 2 or 3 years, Bitcoin really grew up, and we're seeing now really mass adoption. We're seeing so many banks and financial institutions coming in. We're seeing Bitcoin being used on the balance sheet. You know, yeah, macro strategy. I mean, we all have listened to Michael Saylor at length. But from your point of view, what will we need to take it to the next stage? Do you think it's what's currently going on in El Salvador? Is this the next stage for Bitcoin? Do you think that central banks will at some point start buying Bitcoin and perhaps start selling gold? What will we need to really step up the game and to approach also new buyers, because at the moment still it is a very, most of the people that are interested in Bitcoin, I would say, are very young, are tech savvy, are open to new technologies. While this is something that we experience, but this is also changing. The older people are, the less open they are to Bitcoin, and the more things like, it's only used for illegal activities, and all the issues regarding the carbon footprint and so on. All those things come up. So what will it need for Bitcoin to come to the next stage?
My father-in-law still doesn't have a smartphone. So it tells you what ends up happening in it, because why do I need that? And so that's typically what happens in our brains. As we get older, we look back on the thing, we don't think our world has changed. We don't see what's happening. So it's no surprise that younger people understand this or deeper. They've grown up in tech, they understand it. But a couple of things here, and I think it's important. There is no such thing as an asymmetric bet if the majority of people understand it. Why volatility? And if you looked at Apple, Amazon, if you look at how many, if you look at Google, if you look at how many 50-80% corrections that they had in their growth cycles, you would be shocked. Go look at the stats. It blows you away. And so you could have, how many people held on to Amazon at $5 and still own it today? Very few people, because they can't handle the volatility. But technology networks, they're inherently volatile. They're inherently volatile or upwardly volatile because most people misunderstand what they are. And that same is true for Bitcoin today. And that volatility is a positive, because whether you're yelling at it, adopting it, every single cycle is bringing more and more people into it and understanding what's going on. And one of the things is probably less known about where we're going, when we haven't explored we've explored a lot of where the existing system takes us. We haven't explored where the new system takes us. And it's probably not for this podcast, but it's really interesting, really exciting for humanity in general, but also if people wanted to make money on something, then understand this network, because it's like it's like being able to invest in the internet itself, not layer 2 or layer 3 of the internet, Amazon, Google. It's like being able to own a piece of the internet itself. That's what Bitcoin is. And on top of that layer, Lightning and now Taproot and a whole bunch of new functionality that's going to come up is going to unleash a wave of innovation on top of that layer that will look like the Amazons, Googles on top of that layer. But all of that innovation will drive prices lower and lower and lower over time of everything else. And I think what you're seeing is Bitcoin is, and actually that's what my hope. I hope this bridge, as you build to the other side, it's repricing everything over here slowly enough that people don't really notice. Right? People are measuring their house and how much value it went up. Well, my house dropped in value in Bitcoin terms in almost half last year. And that's what's happening. It's actually over time translating that value. And here's an interesting piece kind of tied to gold, tied to Bitcoin. Why a credit-based instrument had to be built on top of gold is because you couldn't move gold around really easy, shave it off to buy your ice cream at the local ice cream shop. So you had to centralize it. And that centralizing function, as Mark was talking about, it keeps on gaining power and over time, and it has to be more and more centralized. But Bitcoin, on what it does is it allows the monetary velocity in layer 2 on Lightning Network to be able to operate in a way that you can have as much monetary velocity as you want through this staggering amount. So you're getting people to people trading in Bitcoin. I just, 4 weeks or 8 weeks ago now. I for 3 weeks, a large wire transfer was held up with one of my businesses in India, in Canada, for 3 weeks. Couldn't find that bank. Couldn't find it. Was an error in one of the lines, and for 3 weeks they were trying to find this. I can pay my people directly in Bitcoin. I can pay them for it doesn't cost all that time, waste all of the people. I can do that right now on a Lightning wallet and an interface, and I can pay those people directly and bypass the entire system. And that's happening all over the globe. Remember, when you open up a network and allow anybody who was locked out of an existing system to be able to participate, that network expands. And it's expanding at an incredible rate because it's a free open monetary network that everybody can play in, and you don't have to go through the cost structure of the existing market. So that's bound to expand. It looks a lot like the internet itself, and it's bound to expand at a rate that I think, and that is the difference. Because of that velocity, and money doesn't require a debt-based instrument on top, it gets consolidated over time. You can just trade it on layer 2. It can be both the hard currency. So a lot of, I think, looking back historically, people ask what backs money. In Bitcoin, the network there's nothing backing it. The network is all backing it, right? It's not. They ask what's backing money as gold, because gold couldn't have the velocity. And now you're dealing in a global world that's moving more and more online, moving more and more technology. For that global world to operate, you must have a digitally native currency that can trade across borders unencumbered. And so that's what, and the decentralized version of that is Bitcoin, and the centralized version of that is CBDCs.
So you're not in favor of CBDCs?
so CBDCs, and again, this is going back to my book, but so there are policy papers that talk about a negative 6.6% in interest rate on your savings, negative 6%. Why? Because they think the next crisis requires it. So we don't see negative 6 right now. We see real rates. We see financial repression everywhere, but we don't see negative 6 rates. Why don't we see negative 6 rates? Because people would pull their money from the bank, sure. If a CBDC and they can put a keystroke and pick your pocket, you can guarantee that will happen. And again, if people pull their money from the bank right now, the bank would fail. They'd have to be more printing, and people would race to cash. But under CBDC, under centrally digitalized, effectively it's surveillance money, and they can change. And you have to ask yourself, who should be able to change the rules of society on a whim, and who are you? And here's a whole bunch of people in the system today that are building this narrative. I don't think they know that they won't be the ones creating the rules. Like they're putting humanity down a path that it's going to be a really ugly path, and they think that they're going to be in charge of the rules, and they're not.
I mean, it's probably no coincidence that in regards to CBDCs, China is probably leading the pack. I've heard on the radio today that there was a woman in a small city. It's probably a couple of million people in a small city in China, and they could trace like every action for the last 14 weeks that she made, and all people that she met over the last 14 days. So of course this George Orwell type of world, this dystopia, I mean that's yeah, it's actually happening. And I think you said in your speech in Vienna, CBDCs is surveillance disguised as money. And you ask, why will people do it? Because they will get more for it. I thought that's a very, very interesting thought, and therefore I think it's even more saddening that CBDCs are often compared to Bitcoin, which is completely the opposite of CBDCs. Now, Jeff, I think we covered quite a lot of topics already. One topic that I thought was, or one thought I thought that was really brilliant was when you talked with Nikolaus Jilch about real estate. And over here, and I think now globally, there is some sort of a obsession when it comes to real estate, and in German we call it Betongold, which means concrete gold, basically, because over here, we haven't seen this volatility in real estate prices. Prices were basically surging 2 or 3% every year, and now, of course, the last couple of years, real estate prices went balloony. So what's your view on real estate?
So I think it's typically been a hedge against inflation. And that hedge against inflation, again, concentrates more wealth. Imagine you had one house, you're somewhat hedged against it, and then imagine you had 10 or 1,000 houses, and now you have financial institutions competing with you to buy houses or to buy real estate. You have to ask yourself over time, what does that do to everybody else? As those rents go up, you're somewhat protected, but more and more people are falling below that poverty line. More and more people are falling, and they're going back to governments to be able to either change the rules of real estate and redistribute that, or worse, look in Lebanon right now. Would you want to own real estate in Lebanon? And what ends up happening is you can't move that real estate. It gets stuck into the system. And a lot of people's entire wealth is leveraged to that same real estate. And they don't see what the natural consequences of these actions turn into over time as it gets worse and worse and worse. And they get locked into that real estate, and they can't move that real estate when the inevitable societal collapse happens. And so when I think about real estate in that way, and again, coming back to Bitcoin, I think real estate's losing value compared to Bitcoin. It's taking that value away. And if I remember 12 words, I don't need anything. I could go across borders. I could go anywhere. It's a life raft away from that system. And I think I said it in that conference too. If you're still on zero right now on Bitcoin, you are putting tremendous risk in your hands. Get off zero, put Bitcoin in a hard wallet. If you don't understand how, there's tons of areas that you can learn online, but tremendous risk. You're not seeing risk appropriately. You're measuring risk. You're measuring the entire system is based on something that must change over time, and I would say you're measuring risk wrong. And same thing in real estate. If you have all of your wealth in real estate, then you're not measuring risk. I don't believe you're now. Not to say you couldn't do well for a time, right? The last number of years, to ask the same question going into real estate: what would real estate look like without, over the last 20 years, $185 trillion monetary easing or stimulus? And real estate wouldn't look anything like it looks like today. So now you have to ask yourself the follow-on question: how much more easing is coming, and will real estate look the same? And if you believe that much more easing is coming, no matter what, that much more easing is coming, then you have to ask the next question. What will that do to society? And is my real estate safe? And if you keep asking these questions, you'll realize, it might not be as safe as I think it is.
That's a brilliant thought. The thought that real estate kind of makes you a prisoner of politics, but also the banking system. I thought that's a very very unique thought. Jeff, I mean, you have almost 300,000 followers on Twitter. You're very well connected in the tech world. You're doing lots of interviews, keynote presentations. Um, what's your view? Do people kind of start getting it, or is it still something where we are kind of, how do you say, preaching to the choir, at Austrian economics conferences, at Bitcoin conferences? Well, those people get it, but that's still a tiny part of our society, while the rest of the world just wonders why real estate prices are going through the roof, why inflation numbers are so high, etc. But nobody keeps questioning themselves, why is this happening, and nobody really starts understanding that the root cause is within our monetary system.
Yeah, and I think that's true, and I think it's true. If you look at Austrian economics, even that label, or libertarians, or these labels, these labels give a system that can print money to make it short-term look better and long-term massively destruction. They give more power to an existing system to marginalize people, because those people look like the crazy. Those Austrian economics people, they don't get it. Like, look at what's happening. Your house is going up in value because we live in that system. We are all, and then that debt grows so big that when it actually fails, and it fails for the same reason the Austrian economics believe it fails, because it has to in time. People don't go, you see, Austrian economics was right. They say they vote for another dictator or leader changing rules, and you so I would I caution against labels because of that, because it's easily to get manipulated by a system. Everything I've said on this podcast and others, I'm not saying I won't make mistakes. Everybody makes mistakes, but you could validate what I'm saying, and it's from a first principles standpoint. And it's hard to object with the truth, right? It's hard to look at technology and say this should make things cheaper. As labor falls out of the market, prices should fall as a result of that labor falling out of the market. And trying to create jobs to be able to keep labor going, and against that force, keep more jobs, is forcing everybody on this dystopian path. But it's pretty logical to think, look around, look at your phone, what it gives you, look at what you use today, look at the Zoom call, look at all the things you use. You're voting with your time for technology. It's pretty so you, following on from that logic, you must say, okay, that should reduce prices. Why isn't it? From there, you can start to go under the veil and to see, wait, if that's the world we live in, then is that the world that I want my children to live in? Do I want to teach my children that, whether it's for me or not, that I made my money as a result of fraud? And that's a harsh word, fraud. But if I actually know that that's true, and everything's coming from a corrupt system, and my whole thing is, if I get enough of that money fast enough, then I protect my wealth and I'm okay with my family. That's a pretty horrible place to teach my kids. And so I think about these things. You asked the question, are more people starting to see it? Yes, tons more people are starting to see it. And as they're starting to see it, I hope they're making that choice, because what we say we do versus what we do are two real different things. And so again, a whole bunch of people would actually agree with everything I'm saying. And then they would try to make more money from the existing system so that they can change it. Or they would say, well, the government's going to shut it down. And if you're saying that, and you know that that's true, or that, then your actions matter. We create the world through our actions that we live in. And our shared world is a result of all of our actions that we take. So if that's true, and it is true, then take action to change the world to the world you want to a better world, a brighter future. And that's when I think about Bitcoin through that lens, as more and more people, when I say that, building the bridge to the other side, it's actually those people taking that action, defending it, fighting for it, right? That I suspect is going to pave the way for more and more people to walk across the bridge.
Well, I think we couldn't agree more. Mark, any final questions?
No, I found this actually a very brilliant closing statement of Jeff, and I want to thank you also for your actions, because I think you're very active and idealistic behind this. So I think it's probably a good time to close the interview and say thanks so much for what you've been doing, and thanks for joining us, Jeff. It was great talking to you.
Thanks, Mark. Thanks very much.
Jeff, thank you very much from my side as well. I think, yeah, we agree on basically everything that you said. I think it's absolutely staggering how much creativity and entrepreneurship is coming to the crypto world. It's really fascinating how motivated, how smart, how ambitious people are in the crypto scene, which is sometimes quite the opposite of what we experience, attending conferences in the banking world or whatever. So that makes me pretty confident, although many of the topics that we discussed are actually not fun, but I think as family fathers especially, but also as business owners, our role is our job is to just make the best out of it, and to inform and educate people about ways how to make the best out of it, and I think this is what you're doing very, very brilliantly. So thank you very, very much.
Anytime, Ronnie. It was really good.
Thank
Really
you
good
for your
to see you
precious
again.
time. I know that you're hitting the slopes now. I hope you get some good powder. And this is an open invitation. Every time you're over here in Europe, please let me know. We're super happy to go skiing with you, to go snowboarding with you, to have a dinner with you. We can't thank you enough for this. We really enjoyed this. Thank you very much, Jeff.
Thanks. Look forward to it. See ya.
Cheers.
Thank
Take
you.
care.
Bye bye.